Welcome everyone to Vested Interest. This is Shane back for a Stock Pick of the Day video. This is Thursday. This will be the last one of the week, July 18th. Hopefully you've had a great week. Today we're going to look at one out of the healthcare sector, Eli Lilly. Now, if you are new to the channel or just have not done so, if you could do me a favor and hit that thumbs up button down below if you find any value in the content. Make sure you are subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Hit that notification bell so you're notified whenever we put out any new content. I do requests from subscribers and viewers in general. You don't necessarily have to be subscribed. If you view the channel and want to make a recommendation, go ahead and drop it in the comment section down below. But one more reason to hit that notification bell so you're notified whenever we do put out that video. And really do appreciate all of you out there who have taken the time to do that. The channel continues to grow because of people like you. Just over 1,000 subscribers now, and on to 5,000 and beyond we go. Again, thank you all out there for continuing to support the channel. Now, this is the Vested Interest Stock Screener. This is how I look at a company on a high level to see if I am interested in investing. Just because it meets the initial screener does not mean that I am investing. There are thousands of stocks out there in the stock market. This is just an initial screener to see if I want to do any more of a deep dive into the company's financials. And then if it meets the screener, then I add it on my watch list and do more of a deep dive. Now, we are going to run through the screener at the end, so we'll see where this one falls. Now back to Eli Lilly. Check them out at www.lilly.com. That's www.lilly.com. That is their homepage where I pulled this information from. We're a medicine company turning science into healing to make a life better for people around the world. Harnessing the power of biotechnology, chemistry, and genetic medicine, our scientists are urgently advancing science to solve some of the world's most significant health challenges. It all started nearly 150 years ago with a clear vision from founder Colonel Eli Lilly. Take what you find here, make it better and better. But we're not only dedicated to making medicines, we go beyond medicine to deliver innovative clinic trials that reflect the diversity of world work to ensure our medicines are accessible and affordable. And over here on the right, you can see some of their products. Trulicity, which is a diabetes drug, Verzenio, cancer, Zepbound, obesity, Jardiance, diabetes, Taltz, immunology, Humalog, is that what it is? I'm not sure exactly what the Humalog, or is that a Y? Humalog, diabetes, Humalin R, diabetes, Erbitux, cancer, and Emgality. I may be butchering these names, but Emgality is for neuroscience. So that's the drugs that they have underneath their umbrella. They're really I know they say medicines because a lot of people don't like the pharmaceutical label, but this is a biopharmaceutical company, just like a Pfizer, Johnson & Johnson, that sort of thing. Now, the reason we are taking a look at them, down 6.26% on the day, big drop on the day, close out the day at $848.90. We are talking about Eli Lilly and Company, ticker LLY, out of the healthcare sector. 52-week range as low as $446.56, as high as $966.10. So they are, even with the drop here recently, they are well leaning towards their 52-week high, far away from their 52-week low on this one. Market cap of $764.354 billion, a beta of 0.41, so they are less volatile than the overall market. PE very, very high. This is smoking high. 125.02, $125.02 per share. That's just, I'm just going to be completely honest, that's way too high. This company needs to come down significantly before I would ever be interested. I just do not see the justification for a price to earnings ratio that high, and I would not. That just screams elevated price to me, but we'll see. EPS, earnings per share, $6.79 per share. Earnings date, August 8th, so coming up. Looks like they will pay out at September 10th. Forward dividend is $5.20 paid out on the year. It is a very low dividend yield at 5.57% here. They are quarterly payers, so divide by 4, though we'll see that here in a little bit. Again, we went over the ex-dividend date there. 1-year target estimate is $908.48. And I think I said up here it was the ex-dividend date was August 15th. They pay out on September 10th. The August 8th date was the earnings date, not the ex-dividend date. 1-year target estimate, at least according to Yahoo Finance, where I pulled this information from, $908.48. So they do see some upside as far as price appreciation on this one over the next calendar year. Seems pretty elevated to me. But a PE is just one of many, many metrics, so it could be wrong. Forward, here we're going to look at dividend yield theory. We're going to jump over and look at dividends and splits. We're going to look at their 5-year dividend yield average, 1.37. We compare that to their forward annual dividend yield of 0.57. And since it is lower, that speaks to overvaluation. So we're seeing a couple metrics here leaning towards overvaluation. Price to earnings ratio is very, very elevated, and dividend yield theory says this one is, a little more than twice the price it should be. But again, they could be wrong. Payout ratio is getting up there a little bit, even though they pay out a very low payout ratio. They don't have a lot of room to increase it at 69.07%. Now they are under the 75% that I like here, according to Yahoo Finance. Though this is in question. We'll see that here whenever we go through the rest of this. Now we're going to jump down and look at free cash flow. We can see here back in 2020 they were at $4.4 billion in free cash flow. Big jump up in 2021 to 5.3. A little bit of a drop back in 2022 to 4.6. Even further drop back in 2023. Though if you look at the repurchase of capital shares, that's why I always include this in here. You can see this paints a little better picture. Looks like they're repurchasing shares pretty consistently. Now big jump up in 2021 in the repurchase of shares here, up to 1.2 billion. From the 500 billion in 2020. Looks like it's even a bigger jump up in 2022, up to 1.5 billion. I will say that accounts for the decrease in free cash flow from 2021 to 2022. When they increase their repurchase of capital shares, that definitely offsets that. So you could say there was an increase in free cash flow there. Now 2023, I would not say that. Down to 3.1 billion, but then dropped their repurchase of shares back to 750 million. So I would actually say they were down overall in 2023 from where they were in 2022. So you would not get 4 years of growing free cash flow. Looks like they had 3 years pretty good there and then one down year, which is typical. Healthcare companies do have some tendency to have cyclicality. Now we're going to jump over to stockanalysis.com, another source of information that I like to go to, or source for information that I like to go to. You pick any sources that you like. Just make sure you're not just blindly trusting one source. 2, if not 3 sources to make sure the information you are getting is accurate and up to date. And you pick any sources that you like. You don't have to use the ones that I do. Pick what you're comfortable with. Now they have 20 stock analysts that have taken a look at this. They call it a strong buy. They have a low estimate of $525, and to be all honesty, if it dropped back into the $500 range, even $550 or under, you're probably at a much better buy price than right now in the 800s. I just feel like this is. I have not done a discounted cash flow analysis on this one, but to me, this based on just looking at the couple metrics we have, discounted the price to earnings ratio very, very elevated, and the dividend. Yield theory says it's over twice value what it should be. So 525 would definitely be a much better buy-in price, which would be a 38.16% decrease from where it currently sits. Average estimate of $854, which would be a 0.63% increase from where it currently sits. And if it hit their high of $1,025, that would be a 20.73% increase, and you could collect that very small dividend yield that you would get. Now we're going to look at the statistics here. See how efficiently this company is reinvesting back into itself. So to do that, we look at return on equity and return on invested capital. I like 10% or better for these metrics. Now, return on equity is smoking high. I think that's one of the highest I've ever seen. I think I've seen it in the 30s and 40s, but I don't know that I've ever seen it in the 50s before. 53.5%, very efficiently reinvesting their equity. Return on invested capital, or return on equity to shareholders, and return on invested capital, reinvesting capital back into itself. The company, 15.73%. So I like 10% or better there. So very good numbers overall. EPS, I like 5% or better forecasted over the next 5 years. They are smoking high at 44.22. So maybe that price, if their earnings per share is really going to grow at 44.2%, 22% over the next 5 years, maybe it's not as overpriced as it seems, but it's really going to have to prove it out. Revenue growth forecast, 5 years at 18.95, which is still that's really good. If the revenue is growing that fast, again, maybe there's some justification for a higher multiple, but I don't know if it's $848.90. I would need to do a discounted cash flow analysis on this one and really look into the financials. All right, let's check out the dividend history here real quick. Now, see, this payout ratio, according to stockanalysis.com, says they are over 75%. Yahoo Finance had them at 69%. This is the reason that I like more than one source. So I'm going to split the difference. I'm going to say it there, 72, 73-ish. payout ratio, which is on the higher side. It is something you'd want to watch. Not that their dividend payout is really anything to write home about anyway, but they are on the high side of their payout ratio. And we want a lower payout ratio so they can continue to increase that dividend, which they are at 15.1%. So dividend growth at 15.1%. And if their revenue and earnings per share continues to grow like they say it is, they could probably continue this dividend growth even with an elevated payout ratio, right? Growth year is 9, buyback yield a negative 0.06. So this tells me that they're overpaying for their own shares. A shareholder yield is 0.52%. Now they do pay out on the March, June, September, December timeframe. Going back to February 2022, they were paying 98 cents. Here you go up to February 2023, up to $1.13. And February 2024, they went up to $1.30. So it looks like February of next year would be the next expected dividend raise. Very nice dividend growth. Again, very nice company. Like the numbers overall, without getting too further into their financials. On a high level, this one looks pretty good other than the valuation. Now let's go over to the screener and see if that's true or not. Now looking at the screener here, again, understand the business, check there. Growing free cash flow, nope, we had the one down year in 2023, so no check there. Growing dividend, yes, to over 15%. Dividend payout ratio is under 75%. I know there was some discrepancy there. I'm going to split the difference. Yahoo Finance said 69, and Stock Analysis said 76, so I'm going to call it 72 to 73, just under their check. Check valuation based on dividend yield theory. It is overvalued according to dividend yield theory. Buy below current cost basis or within 15% of a 52-week low. It is neither, so no check there. Return on invested capital and return on equity are both over 10%. As a matter of fact, return on equity is smoking high, over 50%. That's very good. Earnings per share growth equal or greater to the industry or 5% plus. Check there. Again, another one, triple that, over triple that, 15%, over 15% plus there. So 1, 2, 3, 4, 5. It would make it onto my watch list. It is not currently on my watch list. The dividend yield is very, very low. I typically like higher dividend yield. Maybe this is one to add to your watch list. I don't know that I will be adding it to mine. I am pretty heavy in the healthcare space with CVS, with Johnson & Johnson, with Pfizer. This one was such a low. I mean, this looks more like a growth stock that pays a small dividend, similar to Microsoft. So if you're on the younger side and you believe the growth of this one will hold up over time, this one might be a good one for someone who's looking for some growth that pays a small dividend. I don't know that it really meshes with my investing style, but it could for some of you out there. Well, let me know what you think of Eli Lilly in the comment section down below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community, building a community of dividend growth investors, like-minded investors, so we can share our experiences. We can't benefit from each other's investing, but we can sure benefit from all of the shared knowledge that we can provide each other. So share what you know down in the comment section below. Ask questions. Don't be afraid. If I don't have an answer, someone out there probably does that's watching the channel. That's what the comment section is about, for you and I to interact, and for you to interact with each other, right? So again, I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and an investing journey for educational and entertainment purposes. Investing involves risks. You can't lose money and should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor.